Good afternoon, everybody. Today is June 17th. It is about to be 2 p.m. Eastern Time, 10 minutes till, and we're here at Phoenix Trading Strategies training room, where strategic knowledge and information allows you to trade successfully. We're going to be going over trades today for the Fed announcement, which is coming up within the next 10 minutes. In the meantime, before that, let's go to the disclaimer. Disclaimer, future stocks and spot currency trading have large potential rewards, but also lots of potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, let's go to the charts. Right now, we are currently in 4 trades. We are in the Aussie dollar. This is the 15-minute. And I like this trade because this indicator actually that we created is the Phoenix Zones indicator. And it normally will show you price points where sometimes the power dots may show up. For instance, 76.59 is right here. And we have that same price right here, which is telling us that this is potentially going long. Now, granted, these are 240-minute levels right here, so they don't reflect on the 15-minute, and that's where this indicator is very powerful, aside from the fact that we have outlined the power dot levels in the higher time frames. So we're bullish in this trade in the Aussie dollar, and we're bullish at 76.68. Expectation is for it to come up to 77.31, which would be nice. First, it'll have to get through 76.95. So we feel this trade will play out. Let's take a look at their Euro USD. Give it a minute. Euro USD, we're expecting it to go long. And the reason why we're expecting it to go long is because you have a lot of support levels here. Now, currently it is bouncing off of a 200 moving average, and it did come down from our entry, which is 112.68. It's currently trading around 112.55, which is really nothing. 15 pips is irrelevant. The reason why we decided to go long on this one is because on the higher time frames it does show a bullish trend, and it started here, and you can see it started here, and it's holding off right here where this pivot's at right now. So what could happen is that they could come hit this level first and then go long. So we'll be watching for this one as well. It'll be a very interesting trade. We are also involved in the pound dollar, the British pound against the US dollar. And we're long on this one as well. So we'll see how these trades play out. This one's already positive 2 pips, as you can see. And as you can see here, this level here, 156.99, was identified right here. So this is where they bounced off of. The volume completely depicted a bullish run on this, and that's what we're seeing. Even if they were to come back down and retest, we're still anticipating for them to be bullish the way they are. Right now, we're at a break-even point right before the announcement. There's 8 minutes to go. So we're expecting a weaker dollar with the announcement. Let's also take a look at the US yen. This trade looks bearish, and it was identified in a higher time frame. The power dots actually formed in the 600-minute, and it's actually against us by about 10 pips right now, which is nothing, but we're anticipating it to go short. For all we know, they could be setting up or go long and then come down. You can see the resistance levels are right here at 124.30, which is currently where it's at right now, where this pivot point is. So If it doesn't break above this level, then of course we're anticipating for it to come down. For all we know, they're inducing traders to go long when in actuality, their whole plan is to go short. This is the higher time frame, 124.51. Very unlikely for it to reach, but if it did, it would be because they would spike it up and then bring it down. Those are the expectations. And you can see the volume divergence. The volume is starting to decrease. So that tells us a big picture. But let's look at the volume real quickly before the announcement on this one. Everything was going short here. Perfect. And then suddenly this one kicked in, but very little volume. There's more negative volume in this candle right now than positive volume. You have 9.8 million to the upside. You got 18 million to the downside. That means that when this candle closes, we're probably expecting a short candle to go short. So there's much more negative volume in this candle right now than anyone's expecting. So it'll be very interesting to see these trades unfold. In the meantime, we'll take a moment, 5 minutes, before it actually comes to bear, and we'll see how these trades play out. We'll go over them one at a time, of course. What we'll do is that we'll remove the volume indicator so that we can actually move a little faster. And we'll bring it down to a 5-minute. Now here you have power dots forming here, telling you to go long, but usually a shorter time frame is not really the way to go. It's really the higher time frame, plus they're going off of a 240 level right here, which is very, very strong. And they have not seemed to surpass this price level, so we'll see what happens here. It'll be very interesting. Like I said, usually rate announcements are. And you can see power dots forming here on the 5-minute at 112.49. So they're holding pretty well right here, and looks like it could be a bullish movement from that point on. A lot of indecision for the Fed today. It'll be very interesting to see what Janet Yellen has to say. And see, there we go. There goes the euro. That was a quick bounce to the upside right before the announcement. So let's see how they're going to play this trade. And if that one moved, then I anticipate the British pound is also making a move to the upside, as well as the Aussie dollar. Yep. See, it bounced off. Power dots did do one thing. They said it went short, but they held off here at the trend dots. So if that's the case, then we should anticipate a move to the upside even further. Normally when the power dots form, they usually tell you that there's volume and momentum buildup. But here we have way too many multiple time frame on higher levels telling you that these are the support levels and that they're going to go long. So it'll be very interesting. Let's take a look at the Japanese yen real quickly. See the Japanese yen? Told you this one had a bearish volume, and now look at this candle. It's also becoming bearish and trading below this pivot, which is below this pivot. So this is a great sign. We also have this one. If it breaks below this pivot right here, then we're golden. Then we know that it's going to come down like a stone. 2 minutes to go. Let's see what the euro does. That's the one usually everyone watches. And then we'll go back to the others. When it's all said and done, we all want to know what the statement is that's going to be coming out. Fed decision imminent. Question is, are the banks set up for this, and have they already defined their trade the way we're seeing it take place right now? 2 minutes to go. 1 minute to go. It's funny how analysts say a lot, but they don't really tell you where the trade's going. Here we're using cutting-edge technology to actually define what the direction of the trade would be. And we have everyone waiting. Oh, whoa. See, whoa. What did they do? They went short. Look at that. Oh my, no change. Let's take a look at the other trades. They went short. Hate when they do that. Well, let's see what they're going to do from this point. Are they going to hold or are they going to come right back up? Because these are very small moves that they did so far. See, look at that. It's starting to come right back up. Japanese yen did the same thing, went long, and now look, it's going short our way. So that means that all these trades are going to be corrected in our direction. Here we go. Our technology doesn't fail. It identifies the real intent of the trade. Look at this. So that means that the euro must be doing something very similar. Yep, there it is. Look, they went down practically 60 pips, and now they're on the upside, which is exactly what we had defined, but they hit everyone's stops. That's the problem sometimes when you're trading these announcements, is that they are not really, they know that people are taking positions, and so they're trying to stop people out. But right now it's not bad. I mean, we're only down 14 pips, which is really nothing, and still the direction of this trade is eminent to go long. As you can see, we're positive now. Let's take a look at the GBP USD. Look at that. We're positive 15 pips on that, and it still looks strong to the upside. Let's take a look at the AUD USD. And this one we're positive. Yes, it did come down, but like I said, our indicators indicated a long trade to the upside, not to the downside. We're up 21 pips, 23 pips right now, 26 pips. And if it breaks above 7,700, then we're looking at it to come up all the way up to 7,730, which is up here at this level. The only thing is that, again, they like to run the stops. They're not forgiving about that. But we were able to define the real intent of the trade with the volume on how they were going to play it and with the levels. And I told you, this level up here is the one that gave them away, because it was 124.50 that announced a short trade, and it was a higher time frame. It was in a 600-minute. And look at how it is basically coming down at this point. Where we were down 15, 20 pips, now we're up quite a bit on this one. I'd like to say 30 pips. And they hit this, they're bouncing right off of this level. So it seems like they may not go any further, but I still think there's one more leg in this trade. So we'll wait and see how that plays. And if not, then we'll end up closing it. Let's take a look at the Euro USD. Look at that. Beautiful trade. We're up 20 pips on this trade. They've broken this level, which is a daily level, and now have to go higher. Let's take a look at the GBP USD. Again, same thing. They're about to break a daily level, 157.71, which our power dots have identified. And if they don't go any further, then we'll take this trade off the table. But I think they've got room to go. So Fed sees 2016 GDP growth of 2.47 to 2.7%. They are saying economy expanding moderately, job growth picked up. Fed forecast imply 2 quarter-point rate increases this year. That would be awesome. But what's more awesome is how our indicators and our technology has identified these trades on a Fed announcement of the real intent of the trade. So between all these trades, I'd like to say that we're up about 120 pips, and maybe even higher. Like I said, I still think that we have room to go. Let's take a look at the USD JPY. Look at that, beautiful trade. Beautiful trade to the downside, and we nailed it. Now we have a pivot up here. Now let's see what this candle does, because it's bouncing off of a 200 moving average, and if it breaks that 200 moving average, then it's got to come all the way down here, and 123.54 is where I'm expecting it to come. Let's take a look at the Australian dollar. Again, what a great trade. We're up 30 pips after it came down, and it went against us like 20 pips. But it was eminent. They had no choice. Look at this. All this resistance, all these support levels right here saying, nope, this is going long. Like I said, if it breaks 7,700, then we're in good standing, because then it's got to come up to 7,730. So we're going to wait and let this thing play and see how it plays. I'm thinking that this candle still has room to budge to the upside. It's bouncing off of a 200 moving average, and maybe, just maybe, these trades may not play any higher. At the end of the day, it comes down to the Fed announcement wasn't that strong. I'm glad that they're seeing that the economy is expanding and that there's job growth picking up, and that it may imply a two quarter-point rate increase this coming year. But that means that they're not going to raise rates now. And if they're not going to raise rates now, that means it's going to weaken the dollar, and that means that we should see these trades really expand to the upside, bottom line. But a smart trader normally takes a trade, takes money off the table and says, enough is enough. It's time to basically walk away. So we're going to walk away from this trade. We'll take a snapshot of it. And close the trade. So we got out with 20 pips on this one from the looks of it. Let's go to the Euro USD. And the same thing here, it may not go any higher. So we may only pick up 10, 11 pips out of it. We'll take a snapshot for records. And we're going to get out with 11 pips on this one. Let's go look at the GBP USD. Same thing here. Here we have a little bit more. Here we actually picked up 24 pips. We'll take a snapshot of this. 27 pips, 24 pips, 27 pips, 29 pips, 31 pips, 33 pips. We'll get out with 32 pips. And we have one more, if I'm not mistaken, which is the USD JPY trade. And this one's beautiful because we nailed this one. This is the back daddy of them all. This is the one that said short. And you can see all of our indicators in line. I mean, it was just a gift from heaven. And this one, if we measure it, we will see that we are up from our entry to this point 35 pips. That's not a bad trade. And like I said, sometimes it's better to just take it off the table because there's nothing more to really discuss. Hopefully, when you see this video, you'll get excited like a lot of people do, because the one thing that, everyone wants to get an understanding is, what are the banks going to do? Where's the smart money going? Well, we showed you these trades today for a reason. We showed them to you live on the edge before the announcement so you can see the power of our technology. But in order for you to learn more, you got to come to our website. And my suggestion is that you sign up for our free trading room if you haven't done so already. You can download our book, and it also allows you access to our free trading room. So you'll get a book, which is a great read, and on top with 6 little known strategies for mastering Forex trading using cutting edge technology, and you'll also get signed up for our free training room, which is a must. So don't miss out. Do it today, and I look forward to seeing you in the room and hopefully sharing the knowledge that a lot of traders are starting to agree with us, where basically high frequency trading through order flow and volume price analysis is the next wave, is the next stage in trading, and we're giving it to you first. So thank you for joining us, and let's take a look at see how these trades ended up playing, because it looks like they gave a little bit more. Not too much more. Yeah, they moved up a little bit further. We could have picked up, I guess, another 10, 15 pips on the Euro USD. I'm not disappointed, because at the end of the day, we were able to define the real direction. And you can see the pound dollar is still kicking. Like I said, we could have picked up another 10 pips on that trade as well, but sometimes it's better to just take what's on the table and walk away. And look at this. Did I not say that the Aussie dollar was going to move even higher? It's trading at once it broke 7,700. It should come up to 7,730. No doubt in my mind. But it doesn't matter. We proved our point. We proved that our technology is the best for the retail trader right now out there. So if you're ready to join a winning team and get the best information that will lead you to the best trades, Phoenix Trading Strategies is where you need to be. So join us. We look forward to meeting you. We look forward to helping you. Have a great day. Have a great afternoon. And thank you for joining us for the Fed announcement today. Bye-bye.